My name is Nomhle and I hope you are doing well. So, the purpose of me having to start this channel, which is financial markets literacy, is because of the growing demand I have seen personally in this industry. I have been working in this industry, which is the financial markets industry, for 10 years now. I started in 2013 by working for what is known or what was known as an introducing broker or an affiliate or a partner. Just to tell you a bit of a background about myself before I just continue blabbering on about everything. So what this company used to do is it used to go out there and educate people on financial markets, and that is where I started off, by working for an educator in terms of what is trading, what is buying a share, what are shares, how can you buy shares, and so forth. So yeah, that's how I started in the industry. And obviously from there onwards, I grew and I started working for financial services providers. So what made me start in the industry? Pure luck. I was just looking for a job and a job came. And I guess I was fitting for the role. I always say that this seems like a calling of mine. I fell into it. I didn't actually go into the industry looking for Forex or anything like that. I didn't even know there was something called trading or buying of shares or anything like that. I mean, I was only 23 when I started, not to give away my age or anything like that. But yeah, and so I've never looked back ever since. I have continued obviously growing in the industry because I have seen the demand there is for financial markets education and literacy around the country, around the continent as well, and around the world, just globally. You know, it's an ongoing topic that affects each and every single one of us, whether we like it or not. It's macroeconomics, geopolitics, all these nice and fancy words that we don't necessarily pay attention to, but do affect us nonetheless. I mean, change of presidents affect how things are run in your country, and how things are run in your country affects your pockets, you know? So essentially speaking, all these things are connected. And by gradually getting to understand all of that, I deeply fell in love with the industry. And it became a passion of mine to have to educate and inform the next person as well in terms of what financial markets is, how do you trade, when do you trade, and all that. But that's not the purpose of this particular channel. So this is just an informations channel where we will be discussing everything in the industry when it comes to financial markets, not just trading alone, not just buying shares, but working in this space as well. Because I know some individuals, they might have a huge passion for trading, but some others will just say, hey, I just want to get started. I want to know how can I work for a broker, you know? So we'll get into those as well, hopefully, and we will start growing together from there onwards. So the purpose of this particular video that we're doing for today, we're just going to be discussing on 5 topics, not topics, but 5 words that you should, or you would probably hear around the financial markets industry, especially when it comes to trading. Okay, so it's reasons and advantages of trading. Obviously, these are the 5 reasons and advantages of trading that I'll make mention of. The first one is trading on margin. Trading on margin is like trading on a deposit. If, let's say, for example, I'm going to make an example of buying property or a house. If you're to buy a house that is costing, let's say, 100 Rand, even though there's no house that costs 100 Rand, but let's say you wanted to buy a house that's worth 100 Rand and you don't have the 100 Rand, right? So the bank will ask you to commit, or especially if you're loaning the money from the bank will ask you to commit a certain percentage towards buying the property, which could be about 10% of the value of the property. So the bank will say, put down a deposit. So this is to say that, you know what, I can't afford to buy 10 barrels of oil or whatever the case may be, or I can't afford to buy 20 ounces of gold. from you guys, but I'll put down a deposit in order for me to get exposure to the price movement of that instrument. So that is trading on margin. That's one of the benefits that there is to the financial markets, or trading basically in general. The other one is leverage. So when you're thinking of leverage, think of a lever, right? If you were to play on a seesaw, I don't know if you guys ever played on a park on a seesaw before, but there's always the lever on the seesaw that allows the movement of that seesaw to flow, or rather move smoothly without any complications. So whoever's sitting on the other end will be able to lift the other person effortlessly. So if you were to lift someone on, carry them on your back, let's say I weigh about, okay, I'm not gonna tell you how I weigh. Let's say I weigh like 5 kgs, right? And I had to carry someone who weighs 20 kgs. There's a probability that I will not be able to do that because my body capacity does not allow me to carry that much weight, maybe. I don't know if it's scientific or not, but just making an analogy. But now, however, if there is a lever that allows me to carry this person who is way more than I do, this lever in the middle will allow me to lift that person up without putting too much pressure on myself. So that's what leverage does when you are trading in the financial markets industry. It's that it gives you allowance basically to get in and out of the market without, all the pressure that's required from you. That's layman's terms. But just to get more technical around what leverage is the use of borrowed funds to increase one's trading position beyond what would be available from their cash balance alone. Okay, so I can't lift you up with my own strength alone, so I need a bit of leverage in order for me to lift the next person, so that I'll be able to, you get the gist. And then the next one is short selling. Short selling, now, I don't know how many people know, but normally when you are investing in the stock market, you would buy, especially if you're buying shares and they are not leveraged, right? If you're buying shares and you're buying them at the actual stock price, let's say you're buying Apple or Amazon or Google or whatever the price may be, let's make an example of $10, right? Let's say you want to buy it at $10, but now the price is going the opposite side. Okay, now what the financial markets or CFDs allow you to do is that it allows you to short sell. So short selling means that if that instrument happens to go in the opposite direction, because it doesn't always go up, it's not always upwards, there's a bit of a dip. Every trader will tell you they have experienced that. So there's a bit of a dip and fluctuation that goes in the market. So it allows you to basically not only trade on the way up, it allows you to trade on the way down as well and still be profitable if you get it right, and still be profitable on the way down. So that's what short selling allows you to do in the markets. It's that it allows you to place a bet against the instrument itself so that you can also be profitable if you get it right on the way down. And then we get hedging or risk management. So hedging is saying, like I say again, we'll make an example of Amazon and Google and your Apples and so forth. Let's say you hold an entire portfolio where you bought your Amazons, your Googles, all these nice and fancy Meta, all these nice and fancy stocks, and for some reason they're not performing well, and now they're going against you. You have an option, basically, as you're holding it with one broker, or it could be within the same broker, as you're holding it and it's going against you, you have an option to take an opposite trade. Meaning, if it's going down, you can buy, right? Or if it's going up and you can see it's continuously going up, right? And you are losing whilst it's going up, you can sell. So that gives you an option to basically place a trade against the opposite direction of what you are holding, so that your assets don't entirely depreciate in value. So if those assets are depreciating in value, at least you've bought, there's an adverse or inverse direction of which it's going, and you're not necessarily losing all your capital on that particular trade. So the technical way of having to explain hedging is that hedging is a strategy that tries to limit risks in financial assets. It uses financial instruments or market strategies to offset the risk of any adverse price movement. Okay, now on to the next word. The next word is called exposure to global markets and instruments. It's not a word, it's a sentence. That's also one of the reasons or advantages of trading is that you get exposure to global markets and instruments. So I'm based in South Africa. Someone else might be based in another country where you only get access, especially if you're to buy and hold shares. You can only buy and hold shares maybe in that country that you are in. But now the nice thing about trading in the global markets is that you get access to your Amazons, you get access to your Googles and so forth, and your Teslas. I keep on making the same examples because it's probably the most popular stocks, and I'm making these examples because it's things that people normally would use on a day-to-day basis as well, like your Googles and so forth. So like I say, you get exposure to all these global markets and you get to participate and partake as well in all the other global markets rather than having to buy shares and stocks and ETFs and EFTs that are only in or listed in your country or in your region alone. So you can basically buy the Japanese yen. If you'd like to, you can buy the dollar if you'd like to, and all those beautiful, nice, and glamorous and glittery things with risk, obviously, that does apply. Don't take this page as any investment advice because it is not investment advice. It's just mere an information page so that we can discuss like I say, trading, and we can discuss the financial markets, and for you to have a better relationship with your finances and understand your finances on a much better level, and also having to engage in such topics, especially around geopolitics. So for example, if your president were to be changed tomorrow, you need to know how that affects the rand or the dollar if you are in America. You need to know these things, because if you don't know these things, like I said, if you don't know what actions to take, someone else will take those actions on your behalf. So it's nice to know what's going on around there so that you can position yourself and leverage yourself, and or rather hedge your investment so that you know where exactly you stand in this economy. So if you guys have questions, please do comment at the bottom. I'll read your comments and I'll engage with you. If you want to do it privately, send me an email. At the bottom there's an email address, and I'll engage with you and I'll get back to you. But other than that, please do subscribe, like, and share this page so that it reaches other people as well who might be interested in this topic. We'll discuss other things that come about or that are to discuss around financial markets. And I hope you enjoyed this. I hope you found this useful, and I hope I'll see you for part 2.